So make sure you keep an eye on this. The 10-year yield on the 10-year Treasury hitting an 11-month low. Now, some economists are saying that home prices will drop by 1% this year due to higher interest rates. Joining us now, Amir Korangy. He is founder of the Real Deal, rather. Amir, thanks for joining us.
Thank you for having me.
We did see a lot of weakness in housing last year. The data, we saw a lot of major disappointments, particularly in the middle of the year. Now, conversely, we saw housing prices come down, supply starting to go up.
Yeah.
It feels like the dynamics are changing. Is that good or bad?
It's well, it's suggesting, right? So we want housing to always go up, if possibly, especially for people in real estate, for developers. But if it's only 1%, that's not a terrible thing, But for 7 years, we've seen accelerated growth in real estate. You've had mortgages historically low. You've had you've had inventory at 3-decade lows, which has been great. You had millennials being the largest pool of home buyers. 40% of the home buyers are millennials. But now you're facing sort of a perfect storm, which is a bad thing, right? So you have mortgage rates, interest rates going up, which, by the way, we should point out that just because interest rates go up tomorrow, it doesn't mean mortgage rates are going to go up. They will go up within the next 12 months, but it's not going to be immediate. And then you have the tariffs and the commodity prices going up, which in turn makes the building become more expensive.
Well, we know lumber went up early in the year last year.
Steel, lumber. And that impacts foreign investment. Foreign investment in the U.S. has been tremendous for real estate. Since 2011 to 2017, you're averaging over $100 billion in foreign investment. And that's come down by 20%. And that's as a result of a lot of the policies that are coming into place right now.
Well, but on the other end of that, though, for Americans who might want that dream of home ownership, the policies of lower taxes, regulatory cuts, the massive job improvements, even the composition of jobs, would seem like there would be more first-time buyers. And
there have been more first-time home buyers. You have more home buyers than ever before.
We still have a long way to go to get to that historic norm. Wasn't the historic norm like 40% a month would be first-time buyers? And one of the issues, it feels like, the lack of starter homes, per se. I mean, when the average home seems to be out of reach for even these millennials who now want to move out of the basement.
You know what it is? One of the bad things about the foreign investment is that they do come in and they do, on average, spend more money than your first-time home buyers in America, American home buyers. So they come in, your average home buyer in the U.S. is about $240,000. Your average Chinese home buyer, which is most of the foreign investment that happens in U.S. real estate, is around $500,000. So that really changes things. In cities like Vancouver, they've actually put a mandate and higher taxes for those sort of investments.
Right, but they still give they still give citizenship too, right?
They've pulled back slightly, and Australia did too, because there was such a flow of Chinese capital coming in there, and they were literally changing neighborhoods.
But real estate is local, so we know these big metropolitan areas, they benefit, again, from some of its capital flight too, right? If you buy a $100 million apartment in New York City and you never live there, but if you ever have to flee the country, you know where you can get $100 million.
It's the modern-day Swiss bank account.
Right.
It's the U.S. real estate market.
What about the heartland, though? Is anything going to happen there within the heartland? I see the West looks like it's getting a little bit better, and the South looks like it's getting a little better.
Yeah, it is. I mean, you had good housing starts there for several years.
Right.
This year, it's expected to be at 2%, which is only a quarter of what it was 2 years ago, and that's lower. But we'll see how that'll get impacted as inventory starts to increase.
All right, Amir.
Thank you so much.
Great seeing you. Thank you very much.
Thank you.